Dear viewers, welcome to yet another edition of Your Life, Your Money. The first week of July saw significant event in the stock markets of India. Sensex breached its previous lifetime highs of 63,000 and started its upward journey from there onwards. Sensex is at lifetime highs. What should the investors do now? Is it a point of threat? Is it a point of opportunity? Why the markets are going through the roof? What exactly is happening in the stock market? What is the action plan as an investor you need to be taking at this point of time? I will answer all these questions that could be there in your mind in this episode. Stay till the end. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, it is very interesting to know that Indian stock markets crossed the lifetime highs, be it the Sensex, be it the Nifty, or you take the major indices, they crossed the previous lifetime highs and they started gaining traction, and day after day, the higher highs are seen in the stock market during the first week of July. What should you be doing? At the lifetime highs, should you book profits or should you commit more money? Let's try to find an answer for this particular issue in this episode. Very interestingly, if you scan the entire world market, it's only the Indian stock markets which have crossed the lifetime highs. You take any other major market, the Chinese market, the Japanese market, the US market, be it the Dow Jones, S&P 500 or NASDAQ, these are all below the previous lifetime highs. They are well below. They are not anywhere near to the previous lifetime highs. Dow Jones has made a previous lifetime high of 36,000. At the time of recording this video, it is at about 33,000. S&P 500 had quoted 4,800 at the topmost level. It is still at 4,300. NASDAQ had climbed to a level of 16,000. Whereas at this point of time, it is still at 13,000. In the world's way, major markets are well below the previous highs. What made the Indian stock market climb the lifetime highs? I haven't seen this thing happening during my lifetime where the world indices are languishing. They are not crossing the lifetime highs, whereas the Indian market as a solo runner is moving on the upside. Let's try to find out what exactly is happening in the market and try to find a logical answer for what you must be doing at this point of time. To answer this question of why Indian stock markets are going through this lifetime highs, I'll take a minute or two to go back. When the markets corrected in the month of October 21, they dropped from 62,000 to 52,000. They dropped less compared to rest of the markets in the world, which is a significant sign that the Indian market is going to outperform whenever the markets will recover from there. Even though they corrected up to 52,000, they did not stay there for a long time, and the markets were back to a level of around 56, 58,000 very quickly from there onwards. And between 62,000 and 56,000, market languished for a long period of almost like 21 months odd. It's a phase of correction. It is a period of price correction. It is also a period of time correction. That's why it took 21 months for the markets to remain there. And now they have significantly crossed from the previous highs and are making lifetime highs day after day. This is not the first time that the Sensex made an attempt to cross the previous lifetime high. In the month of December 2022, it had made one attempt. It succeeded, but it was a failed attempt, and again it retraced back and spent another 6 months of time well below the 62,000 level. But this time, the move is extremely significant. It covered the distance with the full force. Day after day for last 7 odd days, we are seeing markets making lifetime highs. Now let us look at what is driving the Indian stock market. I have done my part of the research and I got 4 distinct answers why this is happening. Point number 1 is the valuation of the market. Point number 2, the fund flows into the stock market. Point number 3, the growth prospects of the Indian stock market. And point 4, the other reasons because of which the stock markets are moving up. All the 4 points are extremely important, and they are contributing for this massive rally which is unfolding in the Indian stock market. Let's look at them one by one. The first point let's look at is the valuation of the market. In the month of October 21, the Sensex was at 62,000. June 2023, the market was again at the same level. Now, between October 21 and June 23, even though the market is at the same level, the valuation of the market is not same. In the month of October 21, markets were overpriced. It was quoting a P levels of somewhere between 28 and 30. It was overvalued. Historically, many times when the Sensex moves to that particular zone, we have seen markets correcting significantly. So it's a market which has moved ahead of time. It moved to that particular place because of the fund flows in the system, whereas the valuations were not supportive. What's happening now? The markets have crossed the same level of 62 to 63,000, but the valuation of the market is far below what it was recording in October 21. In the last 2 years, the markets have grown. The earnings of Sensex companies have grown. So the growth has caught up. As a result of it, the valuation has dropped from 28 to 30 on the PE scale down to a level of 23,000. So even though it is a lifetime high, the valuation has dropped, and that is giving comfort to the market that yes, we can invest here. And from there onwards, the markets can move month after month and leading to the opening of one more bull market in the Indian history. The second point we have to look at is the fund flows. Very interesting things happening in the fund flows. During the period of correction between October 21 and till about 3-4 months before, the fund flows were not all that much encouraging. When I talk about fund flows, the fund flows will come from two sources. One, funds coming from outside of India, and funds coming from inside India. Domestic flows and the external funds which are coming into the Indian stock market. During this period of 18 months, October 21 to 3-4 months prior, the fund flows from outside of India were negative. That means people were pulling out the money, or the money was not coming into India. The primary reason is not because of India, because of the rising interest rate in US. Now what has happened is, now the US is more or less at the top end of the interest rate cycle. Now the investors know that it is not going to be a big issue to move money into India right now. In the last 3 months, starting from March, April, May, what we saw was significant inflow of foreign institutional investors' money coming into India. We saw in the month of March about 14,000 crores, in the month of April about 15,000 crores, and in the month of May about 34,000 crores, and in the month of June we saw 53,000 crores of FII money coming into India, and it's not showing any signs of stopping here. What about the domestic flows? Even during the correction phase of the market, the domestic flows were very, very robust. Indian investors have become intelligent investors today. They are not worried what FIs are doing. So they earn, they save, SIP culture has caught in. Even during this period, there was 12,000 crore of SIP inflow was coming into the stock market. That's the reason the stock market did not dip like the way it used to dip in the earlier occasion. When I checked the figures last, the AMFi website shows the current SIP book of Indian investors stands at close to 15,000 crores, 14,000 odd, which is closer to our 15,000 mark, which is nothing but on an average approximately $2 billion worth of Indian investors' money is flowing into this market. Now imagine, earlier, it was only the Indian investors' money which was driving the market, not allowing it to fall below a particular level. But now there is like a twin engine. FII flows are coming in, the domestic flows have increased. Both are pushing this market towards a higher highs day after day. It's just not the SIP flows. There are other flows coming into the market like domestic institutional investors, the insurance companies, the PMS companies, people who directly invest into the stock market. They all add to the market's cash flow, and that is the one which is pushing up Sensex and other indices higher highs day after day. The third point that I'm going to talk to you is very, very important. This point answers to the question of the growth prospect. Now you have seen in the last 10 years, a terrific reforms have taken place at multiple levels. India is going through a major transformational shift in many of the parameters what we are looking at it. It normally takes anywhere from 5 to 10 years for an economy to absorb the changes coming because of the reforms. This is not the first time that we are seeing the reforms. We have seen the reforms in the year 1992 when India was close to a brink of disaster, and Dr. Manmohan Singh government brought in the reforms, and it took literally 10 years for the reforms to work through the economy, and the following decade saw a massive rise in the Indian stock market. A similar thing is happening, exactly similar thing is happening, but with a much higher intensity. Starting from 2014 till now, the amount of changes which have happened in India in every sphere is mind-boggling. If you look at the statistics cannot defy you. People may say that, okay, I am supporting one government, one political party. See, you can take it the way you want it. But the statistics, the data will not say wrong things for you. For example, now if you look at the GST collection is at a level of about 1.6 lakh crores, and it is staying there. It is not one odd month. It is showing that particular number. That number is holding on and the number is rising. Likewise, if you look at the advance tax numbers recorded during the first quarter of financial year FY 23-24, that also tells about the profitability of the individual companies. So profitability is on the rise, the top line is on the rise, the GST collection is on the rise, economic activity is booming. So this is very, very evident. This is the reason the data is being picked up by the investors and they are pouring in money into India. There are major trends which are unfolding in India right now. There are major trends. The last 10 years saw a major push towards building a super infrastructure within India. The infrastructure answers just not to the physical infrastructure. Infrastructure also has digital infrastructure. It also has inclusion of the general population into the financial system. So a physical infrastructure, digital infrastructure, and inclusion of general population into the financial structure is creating wonders. There are more roads which have been laid in the last 10 years. There is a mind-boggling number of airports which have been set up. There is a digital infrastructure of population scale which has been built in India. It is all resulting in an economic activity. It's just not an economic activity. It is resulting in an inclusive economic activity. I will detail it as I progress on this video, which is resulting in a massive growth unfolding in India. One another aspect which is working in favor of market is world has recognized that it needs to find an alternative to China as a supply chain solution. It cannot concentrate its supply chain into one single country. It becomes a problem politically. It becomes, now we have seen during the pandemic period, what happened because over dependence on China resulted in the crippling effect of economies across the globe. So the world is looking today to develop an alternative, and countries are looking at producing their requirements from different other countries other than China. China is a massive country, and you have countries like Vietnam, you have countries like Taiwan and other Southeastern Asian countries, but the suppliers require a country which is of size which is similar to China or which can match China shoulder to shoulder and produce. So China plus one is a theme which is right now working, and India is in a place where it is benefiting from this China plus one theme which is working in India. A lot of companies are coming into India. Now you saw Apple setting up factories here, the car manufacturers. Now we heard announcement from Google, we heard announcement from companies like Micron. A lot of companies are coming into India and setting shops here. So China plus one is also working as a tailwind for the stock markets. From within home, government is fully committed to Make in India. Government knows how India is dependent on imports, and imports is a big problem for India. It is the Achilles tendon of India's growth story. If you are able to solve this problem of imports of oil and required goods from outside and try to make it as much as possible within India, that's called the Atmanirbhar Bharat. Try to be self-reliant to the extent possible, and that is going to make a big change in your economy, balance of payment, and the rupee stability. So, make in India is one another thing which is favoring the stock market, and a lot of work is happening around that. As a part of Make in India, there is major shifts which have happened in the defense side also. Earlier, we used to procure our defense requirement from outside of India, apart from giving rise to corruption as well as a drain on the forex. Now, what has happened is there is an indigenization drive in the defense procurement. Instead of getting it from outside of India, now the Indian government is pushing the companies to manufacture it in India, as well as whatever the world requires in the form of defense requirement, India will be exporting. Now, if you look at the statistics or if you are tracking the news of the day, you see that India's defense exports are rising by the day, and India has a very ambitious target to reach a higher level of defense exports in the following years. Now, when the indigenization of defense requirements happens, it reduces burden on the forex and it gives more stability for the Indian rupee, and that gives confidence for international investors to pour money into India. Because of this economic activity, the per capita income of Indians is on the rise. Recently, we have heard that the per capita income has crossed to $2,000 per person in India. It's a significant milestone. When the country passes from $2,000 per capita income towards a higher level, it means the per capita income that is required for subsistence to the basic survival has been crossed. Now, more and more families, when their income rises, their spending increases, the discretionary spending increases, the flow of money in the economy get accelerated. So India is in a sweet spot where it has crossed the $2,000 per capita income. And because of this, more and more families can afford more and more goods which are discretionary in nature. And this is adding to the economic growth of India. One another reason why the stock markets are going through the roof is because of the demographic composition of India. India, by age-wise, is probably the youngest country in the world. The average age of an Indian today is less than 30 years, which means to say, whatever the economic activity which is being done today, for next 2 to 3 decades for minimum will remain very high. So if anybody who is going to invest in India today can stay invested here without worrying about the growth coming down. Finally, you make money when there is growth, and the growth prospect in India is there, and this can't be seen in any other country in the world. So India is again there at a very, very sweet spot. One major thing which is working as a tailwind or the real push for the Indian stock market is the digital transformation which is happening in India. You just cannot imagine what kind of a digital transformation which is happening in India today. You have an entire population, more or less everyone kind of a person is having mobile phones. Look at the data consumption in India. Today, India is consuming data not at a level of any other single country. There is no other country in the world which is consuming data like India. In fact, the amount of data which is being consumed in India is more than that of 2 continents, Americas and Europe put together. That's the level of data consumption which is happening. Because of various initiatives, see, you would have heard about something called India Stack. India Stack is about you started first an identity layer in the form of Aadhaar, which means every person who lives in India now can be identified using the Aadhaar. Over and above the Aadhaar, now you link the bank account, the Jan Dhan accounts, and most of the population today is connected to the banking system. So you have a layer of identity. Now you have brought a layer of financial inclusion through the banks. Now you have made the payments much easier using the UPI. I am given to understand 72% of the GDP value of India is being transacted through digital means now. This is mind boggling. I don't think any other country can boast of this kind of a change which is happening. Now, over and above this, two more things are happening now. A platform called ONDC, which is e-commerce platform, and there is a platform called OCEN, which is platform to give credit to everyone who is transacting in the economy. So it is becoming something like a solution for the entire population. You have a digital transformation at a national level, at a population level, a theme which has never been seen anytime in the past in any other part of the world. Now, the benefit of this digital transformation is not linear. You can't say that you add 4 and 4 and make it 8. No, that's not the way. Nor it is going to be 4 into 4, which is 16. The benefits of this digital transformation will be in exponential form. So there is no precedence to measure it, how it is going to pan out. What we know for sure is that it is going to bring the entire population in an inclusive setup, and all the benefits of development, be it financial, social, government benefits getting into the bank account, spending, or the benefits of lowering of the cost can reach to each and every person, the last man on the line, very, very efficiently. This digital transformation is the one which will drive India's growth story in decades ahead. What are the other factors which are driving the Indian stock market? I have listed about 4 of them here. First is the rupee stability. Rupee earlier depreciated from 75 to 82, and in my previous videos I have told about when the rupee touched 80, I have told people to invest in the stock market, and I told what might happen in the with rupee dollar equation, and the situation exactly played out according to that. Rupee did not breach 82 to a great extent, and I don't think rupee will have a downslide like it used to happen in the past. The downslide of the rupee, what you used to see in the past, is a thing of the past. Very, very unlikely that it will happen. But the chances of rupee stabilizing here or the chances of rupee climbing up against the dollar is very, very real, and most likely rupee has very good chance of appreciating against the dollar. You may think that rupee will never appreciate against the dollar. I can give you examples from history where rupee has appreciated considerably against the dollar. One case in point, which is the nearest, at least some senior persons, people in the age band of 40 and above could remember, is the year 2005 to 2009 or up to 10. Rupee appreciated all the way from 45 rupees per dollar to a rupee level of 38 rupees dollar. Yes, rupee went through a massive upsurge. Why did it happen? It happened because of the currency movement. When the bull markets unfolded, more and more people started investing in India. As a result of that, there is more dollars started coming into India, resulting in a rise in value of the rupee. If the bull markets moves on from here, which it will bring more and more money into India, creating a demand for rupee, and the net result will be rupee is likely to appreciate. I'm very sure it will not depreciate from here onwards. International investors, NRI community should take cues from here and wholeheartedly invest in India without worrying about rupee depreciation. If the market goes up and simultaneously rupee also climbs against the dollar, you have the benefit of making money both by way of currency as well as the market gain. This is not an opportunity you can ever think of missing. 2 other points that will work in favor of Indian stock markets are: 1, Indian government is very stable. Of course, there is an election which will happen in 2024. What we see today, I don't think there is going to be any change in the government. At least for the time being, there is no indication to say that the present government will not get re-elected. This government is pursued as a no-nonsense government, a government which is pro-business, and a government which is for reforms to happen or continue in the economy. This is working in favor of the stock market. Likewise, the Indian stock market is also increasing day after day. Current our GDP size is about $3.75 trillion. It is the 5th biggest economy. Within next 4 to 5 years, it is expected to be the third biggest economy, crossing the 5 trillion mark. When the Indian economy rises day after day, what happens is its weightage in the different indices on which it is listed also keeps on increasing. When the weightage on the index increases in the world indices, then more and more money will also start coming into India. It is also the one which is working as a tailwind for the stock markets to climb up from here to a much higher level. And finally, the investors across the globe do not see any other place where they can find an opportunity. There is no other market, be it in the developed market, be it in the emerging markets, which can compete with India with respect to opportunity. I have no hesitation to say this is probably the golden period of Indian stock market. Anyone who is watching, anybody who is investing in India today, probably the kind of returns they are likely to make in the future will not have any other parallel. Finally, the crucial question: what should an investor do at this point of time? Luckily, all our clients are well positioned. We have constant conversations with them, we guide them, and they are well positioned to benefit from this upsurge in the stock market. For those of you who have not invested in the stock market for whatever could be the reason, you don't have money, you are fearful, you thought rupee will depreciate, you thought that the markets is going to go down, now will feel missed out. You see the Sensex rising day after day. Now, the first mistake you should avoid at this point of time is not to wait for a correction. See, when a market breaks out from its lifetime highs, what happens is you see everyday markets rising and you feel that, oh, I missed this, let the markets correct, I'll come back. This market will not correct. Keep this in your mind. The more the waiting you do, you will catch the market at a much higher level. So please do not wait for the markets to correct. The bull market is just unfolding. There is so much to grow from here onwards. So much to grow. So if you join the bandwagon now, there is so much of a money to be made. So don't wait for correction. Enter now. If you're a person who is already investing in the stock market via the SIP route, you should consider increasing your contribution to SIPs. You may add a few more rupees, or you can increase, you can double, depending on what cash flows it can support. Increase your investment in the SIPs as well. If you're a person who is having a lump sum, you should not hesitate at this point of time to inject lump sum in the market. We normally do not recommend people to put large chunks of money in one single day, but probably I'll not be wrong to tell people to commit lump sums amount of money at this point of time into the Indian stock market. Yes, you don't need to put that in one single day, but maybe a couple of days, maybe 1 or 2 weeks, or maybe within 1 or 2 months, the lump sum you have allocated for the Indian stock market should be invested at this point of time, not to wait at all. The more the waiting you do, more the higher values of Sensex it will reach, and you will be joining there, which brings down your rate of return, probably what you could make. The best part of stock markets are the time when the markets will go through a spike up phase. This is the spike up phase, and I am identifying the spike up phase in the initial phase itself. This is not something which will end in 1 day, 2 day, 1 week, 2 week, 1 month, 2 months. This will be a prolonged spike, and this spike will push up the Sensex beyond your imagination. The rate of return the spike can create for you is not in 5%, 6%, 10%, 15%, 20%. Markets madness, markets depth, nobody has measured. When a spike comes, the markets can push it up by 30%, 40%, 50%, 60%. You can put any number into it, and it may happen. So don't miss this opportunity. This is the time to enter the market. Well, if you are not comfortable to take an action and you need a professional advice, you need somebody to help you in the market to come and invest in the market, you can make best use of services provided by NRI Money Clinic. We have team of experts to guide you, the licensed team of experts to guide you. All that you have to do is, our numbers are shown here in the description box, as well as we have given a link for WhatsApp in the description box. Just click on the link, your WhatsApp will open, send us a message, and one of the experts working as a panelist with us will connect with you and help you to guide to do right investments in India. Make best use of this time and do not delay. Send that message now, and we are eagerly waiting to help you. Before I conclude, one question that could be there in the minds of NRIs I'll answer. The question is, should I invest in India or should I invest outside of India? Or how much of money I should invest in India or how much of money I should invest outside of India? Personally, I will tell you, I would say you put a disproportionate amount of money, commit a disproportionate amount of money into Indian stock market. There is no other place in the world where you can make money at this point of time. If you are somebody who is believing that the US stock market will climb through the roof, I have very, very serious doubts. This is not the first time I am telling this. I have been telling this for the last 2 years. Once the peaks are given up, it will take many years for the peaks to be taken out. So instead of having too much of hopes on the developed market, you should take this call right now and invest in India. That is where the monies can be made. Dear viewers, hope the video that I have done today could have given an idea about what's happening in the marketplace, why newer highs have reached, what's probably there in the future, how you could make money using this particular trend. If it did help you, give me a thumbs up. Don't forget to share this video with your near and dear ones. By the way, if you are a person who is watching my video for the first time or if you are yet to subscribe for the channel, please hit the subscribe button and press the bell icon. Don't forget to share this video with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another episode of Your Life, Your Money next week. Till then, stay safe.
Press the bell icon for more details and subscribe our channel.